Hey everybody. Wanted to do a little video. I did a video a couple of days ago when we first got this big volatility spike back on the 5th of the month. If you didn't watch that video, go back and watch it right now. It's called How to Use Volatility in Your Trading. And I wanted to expand on that a little bit because I'm just having probably one of the best months that I've ever had in the last 8 years. And if you are a good trader and you are aware of the importance of volatility, you can really crush, just absolutely crush markets. And if you haven't watched my video on how to use volatility, go back and use it. Go back and watch it because it will really help you, and it will really shed some light into what you should be doing and why you should be doing it. In particular, I've been holding my winning trades a lot longer right now, and as far as stops are concerned, I'm also giving my trades more room to breathe, so I'm not getting stopped out. So if you're one of my students over the last 8 years and you find that recently you've been getting stopped out a little bit more because, I kind of pride myself on the ability to use very, very tight stops. And for the last 8 years, you could get away with very, very tight stops. But when volatility increases like this, when we have these big spikes in volatility, you can't use tight stops. You have to give your trade room to breathe. Okay, so if we take a look at the spider here, I want to show you what I'm talking about. One of the things that I do is I always keep an eye on the 5-day average true range. And you can see that we are in nosebleed territory up around $7.28. So what that's saying is that the average range per day is $7.28 over the last 5-day period is the average. Now, when you have such high volatility, you can't just trade the way you've always traded or trade status quo. You must adapt for that volatility. So what that means is that when you're getting ready for a trade, by the way, shout out to Gabor, my man, picked up this trendline liquidity here. I got a amazing trade off on that today. Just want to show you guys, just so I'm not making up. I didn't even see that level. He picked it up, right? And let's go to Keener's room. And you can see here, he shouted it out earlier today. And once we hit that liquidity, there, thanks Gabor. He picked that up earlier and took a trade off of that. I said interesting. I took a deeper look at it, and I'll just show you guys real quickly. $1,800 on that one, and I had 2 beautiful trades. Huh. Where it went. Anyway, it was about a $5,000 day for me. Just taking that level here. So in any event, getting back to volatility, when you have that amount of volatility, you have to adapt to your trade. So let's say that you are on a 1-minute time frame, and I want to show you guys how to use this. Let's say that you were on a 1-minute time frame and you were thinking about taking a trade. Well, let's say that I wanted to take a level like this level right here. Let's say my normal risk on this trade was to get long here at 258.34 with a stop at 2 57.77. Okay, so what I would do is I just measure that really quickly, and I would see that's about a 60-cent stop. Now, normally I would use a 60-cent stop, but when your volatility is so high on your daily, look at it's almost 3.5 times the average. The average looks like it's about $2, and right now we're at $7. When the daily ATR is so high, and again, this hasn't been an issue for the last 7 years, but now it's an issue. When your daily ATR is so high, and you're trading, and let's say you're usually going to use a 50-cent stop here, I would use a $1.50 stop there and adjust my risk accordingly. Okay, so when you're using your spreadsheets to come up with your entries and your exits, and you've got your stop levels, you gotta times it by 3. Okay, so if you had a 50-cent stop and you were going to do, let's just say, 100 shares, now you have to use a $1.50 stop, or you have to use 33 shares. Okay, you guys got that? You use a $1.50 stop, you either times that by 3, or you use 1/3 the amount of shares that you normally would use. Okay? Like I said, especially I'm making this video for my older students that I'm not in touch with, maybe about 6 months, a year ago, 2 years ago. I didn't really teach volatility too much, especially for your day trading, because it really wasn't an issue, and it hasn't been an issue for the last 8 years. But as you can see, volatility's back, baby, and we could be staying with this high volatility for a long time. This looks very, very different than, these days. Pop, straight back down. Pop, straight back down. Pop, straight back down. Pop, straight back down. Pretty much, right? Look at the difference in how this looks, right? Big green candle, red, red, green, green, right? Now, will we contract? Maybe, but it's very likely, based on the amount of movement that I'm seeing right now, that we're probably going to do more like this. See these periods where we stayed in here for like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, like for a half a month, right? And here we stayed in this for like a month, right? I would expect, based upon the volatility that we're seeing right now, that this could be an extended period of volatility, meaning that probably it's going to look something like this. I could be wrong, right? For like over the next, just based on how much green we have here, I'd say probably something like this for the next 30 days, 40 days. Right? I could be wrong, because we did just come off of a big level here, and we found buyers at that level, and we could come up and bounce pretty high. But even if we do, the volatility is going to stay very, very, very high. Okay? So there you have it. Well, always check your daily volatility. You can do this in the Forex markets as well too. I noticed one of my students, Sylvan, was complaining today that he had an unusual amount of stops, more than normal, and that is because if you check the Forex markets as well too, you'll see that we are high, right? We're at a much higher level, 122. And one of the other things you can do if you want to, if you can put a moving average on this volatility, just to give you a longer term perspective, you can put like a 50 period or a 30 period moving average. Actually put a 20 period moving average on it, and that will probably be good for you. Okay, so For my older students, hopefully you guys still watch all my videos. I'll try to get a message out to everybody, but it's really super important that you take volatility into account when you're day trading especially. Okay? You've got to use wider stops or smaller size. Hope I made that perfectly clear. I've just been killing it, been having a great month so far. Probably the best month in years. Really excited, really happy, and yeah, that's it. Hope you guys enjoyed that. Bye for now.